Welcome everyone to our weekly meeting. I've noticed a few things about our company that I want to talk about today. Tyson, I've been looking at our mission statement and we're not following to it. What's going on?
So we saw a big opportunity in the low-tech market. And so we kind of ventured from our plan, which was to put 2 products in the high-tech originally and 2 products in the low-tech. We threw that to the side. We went after low-tech with 3 products, and we've met with a lot of success.
So Tyson, what's next?
Well, concerning changes to our products, we have a few concerns. With our low-tech products, we're really bunching up right here in that market. We're starting to steal sales from ourselves. And so we're wanting to take our low-tech products and spread them out, give them some room, steal some markets of some markets that we're not currently in. As well, we're wanting to move in and take advantage of these high-tech markets that are available for us. And so that's next on our game plan.
All right, so with changes like this, we're going to need capacity and automation levels at an all-new high.
Yeah, and that's exactly what we're saving for right now. We didn't do anything this round because of that exact reason. We wanted to not go into extensive debt, wanted to be able to pay for a lot of it, and so we are prepared at this point to buy a lot of capacity and to build a lot of products.
Thanks, Tyson. So Dallin, how are we going to finance this new growth?
You know, when we first met and set goals for this company, we wanted to have our cumulative profit by this past year, at the end of this year, at $63 million, which we have exceeded that, and we have almost $83 million.
Wow.
And so in our assets, our cash is almost at $16 million. And so that gives us plenty of money to be able to do research and development and really get a new product out in the high-tech market and get some more cash flow in our company.
And with finances, how do we project for the next year?
You know, Able and Abs lately, it's not, customers aren't wanting that product because it's kind of not close to the sweet spot where, like, performance and size-wise. And so, just like the past couple of years, we're just going to keep cutting down little by little on our production on those products. But so as you can see in our reports, America is kind of to the right of the sweet spot of the market, and so that's pretty close to what customers want. And so over the past couple of years, we've seen increases of demand for this product, and so we're going to continue to increase the production of that. Then also, I've run some numbers, and our average increase for our return on sales is about 22.4%. So our projected return on sales for next year is going to be about 25.7%. And then our average increase for return on assets is about 13.4%, and that's going to put us at 29.4%. And then our return on equity, that averages out to about 8.2%, and that's going to put us at 31.8% next year.
Okay, and with a new product like this, we're going to need some serious marketing. Zeb, what did you have in mind?
All right, guys, we are dominating the low-tech market. We own 35% of the market share. Chester has 16%, and Erie has 21%. So they're nowhere close to us. We've been focusing on Baldwin here for a while because we have a little competition going with them. Their stock price is a little higher, but they're really not even in our segment, so we need to worry about them. Main competition here is Chester and Erie. All right, so since the low-tech market is a bit saturated right now with Chester putting their pieces right on top of ours, I think we should come up with a high-tech product so we can differentiate a little bit and separate ourselves from the low-tech competition.
Beautiful. Thank you, Zeb. All right, Tyler, can you sum things up for me?
Sure. Let's go back to the beginning where we made our mantra, which is sure, steady expansion. It started in round 2 when Chester got that emergency loan, and then even more in round 3 when Baldwin, Chester again, and Erie got emergency loans. And so our stockholders were saying, you know, we need to expand, you need to take advantage of this, you need to get loans, take on debt, and grow, but we didn't. We used our brain, and it paid off. In round 4, Digby got an emergency loan. In round 5 and in round 6, Erie got emergency loans again. Without the government, those other companies would not be here. And so our sure, steady expansion is what we're going for in the future with R&D, developing. We're going to go into the high-tech market with one product at a time as we can pay things. as we learned and discussed in our last meeting, we don't want to buy things that we can't afford. So we're just going to keep going how we're going, and our stock's going to keep going up, and projected growth is sure.
Okay, thanks Tyler. Alright guys, thanks for coming today. Looks like we're on the fast track.